Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, May 13, 2009. Confidence among Japanese merchants who closely deal with consumers, such as vendors, taxi drivers, and barbers, rose to a 12-month high in April. The Eco Watchers Index climbed to 34.2 from 28.4 in March, which was the third biggest jump on record. The recent 32% rally in the Nikkei 225 stock average since hitting a 26-year low on March 10th has boosted consumer moods, as did the record stimulus package passed by the government. The yen kept up its gains in today's session as a third straight slide in European shares led to another round of risk aversion. That was followed up by weaker stocks in the U.S. on poor retail sales data that we will get to later. The Aussie yen pair, after climbing during the Asian session to an intraday high of 74.40, fell more than 200 pips from that high to settle low near the 72 level. The Aussie also slid sharply against the US dollar, falling 180 pips after testing the 0.77 level. The pair seems to have formed a double top following a rally of nearly 700 pips since the end of April. The Aussie has been a big benefactor of rising commodity and equity prices, and the turn in sentiment this week is beginning to pressure that rise. Eurozone industrial production fell another 2% in March, following a similar decline in February. That put the annual rate to a record decrease of 20.2%, a sign that the recession did not let up on the manufacturing sector at the end of the first quarter. European factories are cutting production and staff to cope with the drop in demand for their products. It should be noted that today's data counters better than expected German production numbers, which showed output holding steady for the March period and exports increasing for the first time in 6 months. After a rally yesterday that followed a down day on Monday, the euro-dollar pair fell today after climbing to the 1.37 handle in overnight trading. The dip in the euro began with its industrial production data and coincided with the slide in European equities as banks and energy shares slid. Today's price action broke down through a small upward channel that had been established this week. In the UK, Bank of England Governor Mervyn King said the UK economy faces a slow and protracted recovery as he gave a downbeat and highly uncertain assessment of the UK economic outlook following the release of the bank's inflation report. He said that inflation will probably stay below its target level for the next 3 years after falling to 0.4% this year. With inflation set to remain below the 2% target in the medium term, the current low interest rate and policy of credit easing will not be changed anytime soon. The inflation report and King's comments pressured the pound as it belies the feeling of recovery currently sweeping over investors and market pundits. The pound-dollar pair tested its high from yesterday near 1.5335 and then proceeded to fall 225 pips to settle low near 1.5090. Just as with the euro-dollar, today's action broke a short-term level of support, perhaps signaling a change in the pair's direction for the rest of the week. In a sign that rising unemployment is curbing the spending appetites of U.S. consumers, U.S. retail sales for April disappointed forecasts, declining for a second straight month. Sales are down 0.4% for the month, following a 1.3% drop in March. Though consumer confidence has improved, there are many factors still constraining spending, including fewer jobs, falling home values, and a large loss of household wealth due to the slide in stocks this past year. U.S. import prices rose 1.6% in April, which was more than double the rate expected, though on the year prices were still down 16.3%, the biggest one-year drop since the index was first published in 1982. The drop in annual prices was driven in large part by falling oil prices. U.S. business inventories declined 1% in March, less than the expected 1.1%. It was the 7th consecutive month that inventories declined, the longest stretch since 2002. Sales decreased by 1.6%, which put the ratio of goods on hand to last 1.44 months at the current sales rate, the same as in February, meaning companies may keep cutting their stocks. When stockpiles get run down, businesses increase spending on orders, which so far has not happened. We have seen already how the greenback gained on the euro, pound, and Aussie, but against the yen, the dollar kept sliding, extending its losing streak to 4 sessions and finding a new low at 95.15, which is the lowest the pair has been since March 20th. U.S. stocks were battered today on the back of the weaker retail sales data. The increase in risk aversion was very evident in today's trading. One last pair we will look at is another commodity-sensitive currency, the US dollar-Canadian dollar pair. Here, similar to the Aussie, we saw a strong move upward amounting to about 200 pips from low to high in favor of the greenback. The pair has broken a downward sloping line of resistance, signaling the recent downtrend that has been in effect since about April 22nd may now face a period of consolidation. Tonight, look for the New Zealand manufacturing PMI and a report on inflation expectations from Australia. Overnight, Switzerland releases data on producer and import prices, and the UK posts its leading index. Tomorrow, the US will reveal its producer prices, along with weekly jobless claims. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.